following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 23rd, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go take a look at the circumstance of these markets. We're going to go try to figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. Of course, you can email me, steve@tfnn.com, in the Tiger's Den, send an instant message. However it is that you want to get through, we want to hear from you. So let's go ahead and get this show started on fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 81 points. She's trading out at 18,311. S&P is off 8, trading at 2168. NASDAQ Composite off 18 points, trading at 5321. Russell 2000 off 7 points, trading at 1256. The DAX in Germany closed off 47 points. The FTSE down 2. Gold is off $2, trading at 1342. Silver is back 22 cents. Trade at 1987. Light sweet crude back $1.78, trading at 44.54. I would tell you who's leading the charge to the upside, but I see I need to reset my computer during the next break, and then I'll be able to tell you who's leading the charge to the upside. I do believe, though, that it could be Twitter, of all things out there. So we might take a look at Twitter. But to the downside, it looks like who is leading the charge here is Teleflex. Teleflex? Yeah, Teleflex. TFX is the ticker symbol out there. No, I take that back. It's Priceline. Yeah, there we go. Priceline's off $8. You've got Intuitive Surgical down 7, BlackRock down 6, Oshkosh, by gosh, down 9%. That's off $5 and change. So we can take a look at some of those individual stocks. But first, the question is, hey, what's going on? What's going on with regard to this retracement as we speak right now? Who is it? That has control of the markets as we speak right now at 1:09 p.m.? Is it bulls or bears? How do we answer that? Well, one of the ways that we answer that, I really should get the chart out here, that is going to be trying to understand if price is coming back to a level of support, breaking a level of support. Let me get a new chart out here. That way I can start with something fresh. Let me do this. It's going to take just a second. My apology. Just jumping in the catbird seat here as it was away for the morning. And so then got into just a discussion inside of our Tiger's Den. And folks, if you haven't had a chance to check out the Tiger's Den, you really ought to. Extraordinary individuals providing extraordinary information pertinent to trading all types of instruments out there. So, it's more than just a plug. It's a reality. Now, with regard to who is in control, assuming that we don't see some type of bottoming pattern or topping pattern. We're not really talking about patterns here. I'm just giving you the general overview right now with regard to the market. Let me start off by taking a look at the Dow, since that's the lead dog to the upside, or maybe to the downside, I should say, out here today. Dow Jones Industrials. As long as price, and this is going to be important today, watching how this plays out, 18,274.82 or 80 right now. Let's just call it 18,274 right now is the number. If we see a close below that, And you heard me yesterday. Now I'm going to look at daily charts. This is not impact, effect, whichever kind of effect we want, intermediate term, longer term trading styles. With regard to taking your signals, with regard to the noise of what's going on, I think I said regard twice, the daily signals out here, here's what I will say. As bullish as the markets were yesterday and the day before, do not let those markets kid yourself. I will not kid you. I shared with you this yesterday, as I do every day. My role, my job is not necessarily to have a bias, even though I might have a bias because of some trades and things that I have on, but not to have a bias when I come to do this show with you. It is to call the market as it is. If we flip the coin and it comes out heads, I'm not going to say, well, it's sort of heads or maybe it's tails. This is black and white. This is just absolute black and white. And so the black and whiteness of this says 18,274 is the number. If you see the Dow close below that, go ahead, load up the truck, back up the truck. I don't do any of those things unless you're using stops out here. But it'll tell you that the last 2 days, from a daily perspective, were nothing more than hogwash. Hogwash. No, it is not the 9-day moving average, exponential moving average. Has nothing to do with 9-day, that red line that is on my chart out here. That red line on my chart, when price is below that red line, it eliminates one side of the trade. It eliminates being long. I don't care what took place over the last couple of days. You can change your opinion, the message. In choppy markets, it gets a little bit difficult. No question about it. But it tells you which side of the trade you ought to be on. It's called the oscillator unchanged line. And you might say, what in the Sam heck is that? That tells us when the price oscillator, and you're going to say, what the heck is that? If you didn't already, you're going to say, what the heck is that? It's very simple. The oscillator unchanged line, many people use it sort of, but they don't really know what they're using out here. And many people, it's pretty popular out there, use a tool called the MACD, right? Now, one of the elements of the MACD was kind of interesting because at the same time that Gerald Appel and his brother, I don't know if his brother was in on the original development, I know he's in on it now, we're developing this tool out here. You know, there were other tools that were being developed, by Herman and Sherman and, what's his wife's name? I know she passed away. Helen, I think, right? Sherman and Marion. Sherman and Marion McClellan out there. They also were, and there was a third guy out there, Peter Harlan. All of these guys, different parts of the country, believe it or not, all working on similar type tools. Eventually, they all get together because, you know, the Technical Analysis Society was relatively small at that stage of the game. Now it's all over the place, right? And the price oscillator is what measures the difference between two moving averages. Now, look. Gerald Appel, he was big into simple moving averages back then. I don't think that is the case just now. But if you took a look at his original work, his original tools, all he was looking at was the difference between the 12 and the 26 period simple moving average. Sherman and Marion, they, because of Peter Harlan, who, by the way, was an actual rocket scientist, and that's what's cool about it, decided on using what was called the 1% trend and the 5% trend. You and I, we call those exponential moving averages. 18,274. It's either going to hold the support or close below it. Says, sayonara, baby. Steve Rhodes with TFNN. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's off 88. S&P is down 9. We know there's a number there that you and I are going to pay attention to at today's close. Now, oftentimes, that red line on my chart that we take a look at in the price section of the here, I'll put the Dow back up here for you, is a significant level of support or resistance. And so at this stage here, you or I, we really don't know whether this is going to hold that support. It is normal, and I do mean normal, for this level to be tested. I shared that with clients. Well, I've shared this with clients for quite a while, but I reminded them about this when we saw that breakout 2 days ago. And you go to, if you were to take a look at the newsletter, said price is going to come back and test the oscillator unchanged line. That's the red line that's on my screen out here. If we see that level hold as support, bounce off of it, then that's a very bullish message out here. Now, inside the Dow Jones, there's a lot that's to be desired with regard to its bullish message. But and look, with regard to the markets, we're so far away from synergy out here. What the Sam heck does Steve mean by that? Well, if we take a look at the NASDAQ composite, we're light years away. I don't know about light years, but we are a mile away from it testing its oscillator unchanged line. But we'll go with the Dow, right? Let's go with weakness, because from weakness, we can determine the strength inside the market. Because if the Dow is able to hold that line, tests it, rejects it, and moves higher, and we combine that with what's going on inside the Dow's 30 advanced decline oscillator reading out here. That happens to be this chart that I'll go ahead and explode. As long as this stays above zero, right now you can see it's 0.69 out there. Something to think about. But what we can say is that as long as this remains positive, anything above zero, as long as price on Stevie's other chart remains above the red line, it is buyers that have control of the market. That was really the question that I had posed early on, was who has control of the marketplace out here? And with regard to the weak link out here, the weak hands, right now inside the Dow, it is still buyers that are in control. At the end of the day, and gosh, I hate using at the end of the day, but I don't know how else to say it. But at the end, I know. At the end of the trading session, right? I'll try to remember that. I'm going to put a little yellow sticky on my screen out there so that I don't get caught or trapped into saying the at the end of the you know what. But at the end of the trading session, then we'll know. And so now, what we can also do as we see this happen, as we see this occur, is say, well, why is the market pulling back? Why is it pulling back today? Well, first of all, you and I looked at this yesterday. There's a handful of tools that you and I use, we reuse, we use over and over and over again. We respect these tools out here. One of those tools is the market's ability to sing. And we know, like Stevie Wonder, when it gets up to the key of G, oftentimes also referred to, or I refer to it as that seventh wave, because wave number 7, 1, 2, 3, 4, 5, 6, 7 is A, B, C, D, E, F, G out here. Now on my charts, because of all the other Tom DeMark markings that are on my system, I've reverted back to the letter system to go ahead and count our waves. When you get up to that seventh wave or that key of G, you got to, that's a technical term, you got to pay attention to it. Why? Because I don't care how strong a market is. For some reason, it's like an athlete. Market's no different than a set of athletes. It's where it poops out. It poops out. It can make significant tops. It can do all kinds of things out there. It can be an indication that, guess what? It's a relay race, and somebody else is just taking a baton, and they're ready to go and move on out there. So it's also a really nice momentum tool out here. In this case, in the Dow 30-minute equity futures contract, it identified the most recent high. And now we're seeing a retracement. That retracement, you go back to the daily chart, may be doing nothing more than coming back to support. So anybody who's out there that says the sky is falling, no, price is just retracing as we speak. All right, now we can see on the way down, we are in the fifth key, or the letter E at this stage here. We don't have any kind of price relative strength divergence, nothing that indicates to me that there's really any kind of bottom or anything at this stage. So all we have to go on is really the daily tools out here. And I think that it's going to be about the Dow. It could be about the New York Stock Exchange. It could be about the S&P 500. In the case of the New York Stock Exchange, as we take a look at it, and I'll go ahead and put the its number on my screen for us. Why we pay so much attention to a indice that we can't trade, or well, I use it because this tool is very important to use, which is that advanced decline oscillator reading, which, by the way, still at a positive 41.22. So even with the pullback inside of the New York Stock Exchange, hands down, I don't care what anybody says, it is the bulls, it is the buyers that are still in control of that broadish type indice. And quite frankly, not until we would see a close below the number of 10,689.23 to be exact, but we're not going to be exact, 10,689, it is still buyers, still price just coming back into a breakout area. So for those of you that are taking a look at the gap out there inside the NYSE, and you say if price closes below that gap, that it's curtains, I would say instead, really pay attention to that price oscillator unchanged line, 10,689. That is the more important number, not where the actual gap took place and where price closes and so on and so forth. And inside the S&P 500, we'll take a look at it out here. And now in the S&P 500, what we would do for additional tools to create that kind of synergy. By the way, it's 2159.80 as we speak right now. So you're talking about another 9 to 10 points higher as far as where we're trading as we speak. And so it is still the buyers that are in control. The other element with regard to the S&P that you and I will take a look at always is the VIX index. And if we take a look at the VIX index right now, nowhere near the 50-day exponential moving average, which is 1392. And as long as price is below that, nothing will really get out of control. Doesn't mean there's not retracements going on. The market moves, as I like to say, sideways to higher when price is below that level. Now, there are some other rules, but in general, that is a excellent rule to go ahead and follow. So that's with regard to the markets as we speak right now. You and I, we've taken a look at the weak links out here. We took a look at a strong link, which was the NASDAQ composite as well, and everything seems, quite frankly, hunky-dory. Not until we see some of these very important levels fail. And the nice thing is with the market up towards these highs, those of you that want to back up the train and take the bearish side out here, actually just wait for the actual signal to come in. Wait for the better signal to come in. In any event, that's my thoughts on it, and you know that. Now, let's take a look at, since this is the end of the week out here, In fact, let me just change the S&P right now, this chart here, to a weekly time frame. In fact, I'm glad that I did this. Thank you for asking me to do that. Because now when I take a look at the S&P 500 on a weekly basis, and this is important, you can see how where prices trade inside the S&P 500, it's trying to get over that wall. You, as bulls, want it over that wall, and yet it's not been able to do that. You can see that price is trading right now on the weekly oscillator unchanged line. So from a weekly perspective, the question would be, who's in control of the market? It is sellers, right? You're going to get a different view taking a look at the daily, a different view taking a look at the weekly. Yet if I put the NASDAQ composite out here, and I don't know what the answer to this is, but since you asked, we're going to go find out. Let's go see who's in control of it. Aha, voila. It is the bulls, in a big way. 51.95.71 before the bears on an intermediate time frame basis could have control of this indice. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. A couple of email questions that have come in during that last breakout here. One, it says, "Hi, Steve. What wave are we at for gold?" And here's what I would say: that right now the wave count inside gold doesn't matter. That's really not the pattern that you want to focus on. And with regard to which wave count, though, just simply to answer that question for you, and you can see we're trading inside the cone of silence out here. And, you would have to say that this thing made its fourth wave to the downside. Let me get my cursor out here, just so you know. It made that quite a few days ago, September 1st. So it's just simply not the that's wave number 4. But that is not the pattern that is in play here. We utilize a number of tools out here, and you're looking to see what pattern is really, excuse me, is price following along. You hate when you get those dust balls in, especially when you're like right between a syllable and a vowel or something like that, or an explanation, even better. And if you're trading Goldilocks, the numbers that you want to focus on are really the rising and the descending price channels, because we're trading with inside that. That is acting as support and resistance. Getting smaller, it's getting smaller. We're not yet to the apex. The apex of this doesn't really occur until October 14th. I don't know that we're really going to get to October 14th, but that is really, where we're trading. And what other tools could we apply to this chart or any other chart to help us understand important levels of support or resistance? Well, we can put our market profiles in for sure. What do those help us to identify? This pattern is going to break at some point in time. If it breaks to the upside, somebody's going to say, aha, bullish flag or something like that, and this thing's going to shoot to the moon. They might be right about that. I would then say, well, hold your horses, because there's a level of resistance, horizontal resistance, that you'd be ignoring at 1366. So no breakout can get underway until you at least get above that. And then the reality is no breakout could occur until you get above the swing point here from the trading day of July 11th, which is 1383. So there are some other levels of resistance, but boy, you get above all those, and you have to be a fan of, they're right, this thing could go to the moon. Likewise, you break to the downside, then you take a look at this wedgie shaped pattern out here. You can come back to the base of the wedge and give yourself a price projection, which would be pretty easy to do, and it gets you down to the 1200 area. But the reality is you've also got to break the support levels, these horizontal support levels, to the downside, 1295 being the most important one. At this stage here, what is it that gold is telling us? We're traveling in the cone of silence. And the real support level on this right now is 1331. That's my oscillator unchanged line level out here. Is there much of a trade from a longer-term perspective inside gold? No, I don't think so. I wouldn't be trading this to the shorts. And the intraday is a whole different story. You'd be looking at some 10-minute, 15-minute, 20-minute, 30-minute charts, things like that. But with regard to daily charts, which I'll assume, since the question was, hey, what wave are we in? And I think that was really referring to daily. Don't even worry about that at this stage here. You're just kind of, it's a little pinball machine, and we're just, how you get that pinball and it kind of it gets into that little, where it goes back and forth out there. I don't know that it does a thing, but you know what I'm referring to if you are a pinball wizard. I think when I was, in my young teens, foosball wizard, is it foos or foos? And pinball wizard. I mean, that's what we did, right? We went up to the SS Kresge. Did we, as kids? Did we go up there? We got those, what were they? Slushes, right? We called them. They still call them slushes. I think they do. What they? I don't think they called them slushes back then. What were they? But you went up to SS Kresge. You did that same thing, and then inside the mall you went and you played the pinball. I wasn't the only one that did that. Right? For a nickel, you could play pinball or something along those lines. In any event, okay. So that second question that came in, yes, Kresge's were Michigan people. They absolutely. No, I didn't know if they were only Michigan people though, but maybe that is the case out there. But you know what I'm referring to. Now, if we take a look at the question that came in is, would I take a look on from a weekly perspective? Would I take a look at the ETFs out there? Index ETFs, I assume, is what the emailer was asking for. So yes, let's go do that. And let's take a look at the Russell 2000 first. IWM is the ETF that we would use for the Russell 2000. Let me. So here's what do we. Whoops. What do we know about the Russell 2000? I want to go ahead and turn a couple of things off. I want to turn off those profiles because not that they're not valuable. They are valuable. Just for my purposes right now, I'm going to go ahead and turn those off. In fact, what I'm going to first do here is tell you a story of the IWM. And the story goes like this. The story says, hey, show me where we're at from the beginning of time, actually from the bottom of 2009, just so I have a good picture as to what the Russell 2000 is doing, has done, so forth. Well, you can see the rising price channel represented by the green lines on my chart out here. So the trend is its friend. The trend is to the upside, right? So we're good there. The monthly chart also shows the month of September is now trading into the Russell 2000's all-time high. All right, June, the month of June 2015, which had 669 million shares. We're at 443. We're September 23rd. Even quick math says we're probably not going to do 669. So what? So, okay, what's your point? It doesn't really matter until you get to the top, which is 129.10. The low of that monthly swing point, 123.03, or 125.08. That's what the monthly chart shows. That says you're going to go test the high out here, 129.10. And there's not and you can see a little red set of diagonal lines on the daily basis. It shows also rising price channel in a smaller one inside the large one out there. Weekly basis, which was really the question out here, what are we doing? Where are we at out here? Well, let me try to turn off a couple of these channel lines out here. Let's see if I turn this one off. Okay, that was a long one. I'm going to turn off the shorter one too. And what you're going to see is an A to B equals CD to the upside. Now, I got to turn off the yellow line because that happened to represent the monthly swing point. Different when we take a look at the daily. But here's what you know about IWM. The B point, the swing point inside it, took place the week that began June 6, 2016. There were 132 million shares at that swing point, right? The market talks, walks, and squawks when it gets up to that swing point. And on the week of July 11th, it did talk, it did walk, it did squawk, it did all of the above. 142 million shares. That, my friends, is what we call a confirmed A to B equals CD to the upside. That gives us a price projection of 133.19. Now, that would be the uno to uno. That would be the one-to-one projection level. If, in fact, the Russell 2000 is able to clear its swing point high, right? The monthly says, we're going to go test it. You want me on that wall, 129.10. By the way, there's only 137 million shares up there, so coming into that on a weekly basis with volume should be no problem. You're already at 121, so that should not be, we're not there yet. The weekly, by the way, is 126.82. If you're coming to that swing point with similar or more volume, this says forget about 133.19. That was just the one-to-one projection. Says you go up to 139.99. That's what the Russell 2000 is communicating to you and I, right? Monthly picture is going to be different than weekly. Is going to be different than daily picture out here. The daily picture yesterday was muy grande. That doesn't even make sense, but it did take out the swing point with volume. September 7th had 17 million shares. You took that out yesterday with 36 million shares. I hear someone knocking on the door. I believe that is Russell. Russell 2000, headed for higher prices. Steve Rhodes with TFNN. Great remarks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off about 90 points right now, and we're taking a look at the we're taking a look at the ETFs, and the questions were about the weekly, what was going on. Just a quick follow-up. Here's a question about the XLU, the utility sector inside the S&P 500, and so we're just doing this right from scratch out here as we take a look at it. Now, when we take a look at the XLU, I've drawn in the price channel lines. Let me do this here. Here's the normal for those of you that are watching on Tiger TV in wonderful HD, probably big screen HD out there. We love you. We love you for doing that. Now, typically, remember, you and I, we take a look at different types of price channels, horizontal and vertical. And we take a look at diagonal, really is what I should say, right? Because vertical, that'd be like straight up, and diagonal, that means, diagonal. And here is the diagonal rising price channel out here. Just like when we take a look at our primary trading range boundary lines, horizontal trading range boundary lines, once we have and we're looking for at least 3 or more co-located opens or closes out here, that's really what helps us cement our channel lines. Once price breaks above or below one of those, just use the same distance. That's all I'm doing. You'll see me add the second one out here, right? That's the exact distance between 1 and 2. Those can act as levels of support and resistance out here. And then you could add, in this case here, we're up to channel number 3. So right now, what we can see with regard to the XLU, and the question was long, short, or what have you. Right now, we can see prices trading right into its secondary price channel line. But is that bearish? No, that's not at all. If we take a look at where prices trading in relation on a monthly basis, in relation to the January high out here, that high was 49.78. We're trading at 50.92. Volume there was 274 million shares. Guess what? You're above that as we speak right now with 276 million. And that was taken out with 277 million back on June 1st. So from the basic A to B equals CD perspective on a monthly chart, the XLU has done one thing and one thing only. It's confirmed an A to B equals CD to the upside. You're trading above swing points out there. It's got some, doesn't mean it doesn't have a little bit of resistance out here with regard to the trend line, but on a monthly basis, it looks PDG, right? Pretty darn good. Now, I'll turn those channel lines off on it. There we go. We'll turn those off. And if we take a look at what's going on right now on the weekly basis out here, looks like it's headed for the swing point high on a weekly basis. The low is 51.44. Volume there was 66 million shares. You're at 63 right now. So you're moving up into that swing point, and you're doing it with volume out there. So that's what it looks like inside of the XLU on a weekly basis. Now, coming back to the index ETFs, the diamonds, right, which we really want to take a look at those because, that is a weak link that is out here. First, if I go put this on the monthly chart, you'll see the nice rising price channel. So price is back into that level. It broke through there, and back in the time frame of, what was it, January of this year, it looked like holy heck was going to break loose. Why? Because price closed below that rising price channel. If you go back to the top in 2000, you go back to the top in 2007. Quite frankly, once price broke through that channel, not that it couldn't go back up and test it, once it broke through that channel line, its trend line, so to speak, it did spell curtains for the market. And it did look like coming in January to theaters near you that, the curtain had fallen. But price was able to fight its way, get back in. On a monthly basis, you can see in the body of the candle is the essence of price out here. You can see that we were only outside of that price channel line for 2 months, January and February. Ever since then, we've been back in. Price, interestingly enough, this month on the push down, found support right at the bottom of that rising price channel. So everything here looks hunky-dory. What does hunky-dory mean? Right now, if we take a look at last week, by the way, there's an A to B equals CD to the upside. On the weekly. Let's go to the weekly because that was the question that was out there. And if we take a look at the B point of an A to B equals CD to the upside, this one here has gotten a little complex. But if you take a look at April 18th, that's the swing point I would use, 13.3 million shares there. And when that B point was passed, it was passed with 15 million shares. So you've got a confirmed A to B equals CD to the upside inside of the Dow. 197.41 is where it says it wants to go. You're trading 182.74. You're still trading above that B point, that swing point. It's just going to take a while, it looks like, to get up there because it is weak. Now, doesn't take away from what you and I were looking at earlier on the daily chart. And again, all different time frames are going to have different meaning out there. And that is helpful to whichever bucket it is that you are managing or you are trading out here. So from the daily perspective, that's how we opened the show. We took a look at the level that if that price gets not just breached, you need to see it close below it. It says the results of the last 2 days are they're not even suspect. It was a bunch of BS right before Steve. You might have thought it didn't matter. I'm telling you, it would matter, and it would matter a great deal out there. So with regard to the diamonds, that's what the weekly chart for the diamonds is communicating to you and I. Let's just go ahead and finish this off. We did the IWM. We did the diamonds. Let's just do the SPY out here, right? Traded. And the SPY's got the same pattern. Right? If we take this to the weekly, let's leave it at the weekly chart. 212.52 is the number. That's the B point. Volume there, June 6, 379 million shares, passed with 460. It qualifies in every textbook that's out there as a confirmed A to B equals CD to the upside. That gives us a price projection inside of the SPY of 230.08. That's your one-to-one. Doesn't mean we're going to do that today, tomorrow, or the next day. No, but on a weekly basis, that is the information that you and I have with regard to what the SPY is doing. What is it doing this week? Pushing higher with 369 million shares so far. On a weekly basis, the swing point high only had 306 million. So, and the swing point I'm referring to on a weekly basis is August 15th, the week that began. The low there is 217.02. We're trading at 216.14. Even if you close below it, the weekly basis says you're pushing into a swing point with volume. And as Tom has taught me, as he's taught you, as he has taught the world, you push into a swing point with volume. Doesn't matter if you reject it. It says you're going to be right back up there. And the only thing that'll change my mind with regard to that is if the S&P 500 itself, which is what you and I will rely upon, closes below that level that I gave to you today. And that level is 2159. 21. Right now you're 21.66 out there. So pay attention to that 21.59 level. It's really not down too far. So I hope that answers your question with regard to what the weekly charts are doing as it relates to the index ETFs out there. Okay, let's go take a look at what's going on in some of these individual stocks. Let's go take a look at Twitter out here. What is Twitter's tweet? Now, that is supposedly, I didn't hear the news. Subscriber updated me on that. Thank you for doing that, indicating that maybe it is Google that wants to buy out Twitter out here. So let's go take a look at the message of Twitter, see what it is doing. 152 million shares right now to the upside out here, and I don't know really what the offer was. So yeah, downgraded today. Yeah, and AG, I saw something. I thought it was like about 5:30 or 6 in the morning where Twitter was trading to the downside. I don't think it was last night, but it could have been last night after hours. But in any event, it's gapped up. And yeah, it was. And but guess what? It's not trading to the downside. Say now, just how do you trade this? It's trading at 22.14 right now. If you're not in the trade, I don't think that you do trade it. Period. End of story. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome Welcome back, folks. Dow's off 113 right now. S&P is down 12. So let's leave you with the numbers, the most important numbers of the day at the end of the trading session. We might as well start here with the SOX semiconductor. It's a daily chart that we're looking at. The price oscillator has turned down thus far. The number is 810.80. We'll just call it 811. We'll just round up. Any close underneath 811 on the SOX spells a little bit of trouble for it. Let's start up at the top. Take a look at the NASDAQ composite. This one you want to pay attention to because a real bad close would be any close underneath 52.89 out there, just to kind of get things synergized out here. So 52.89 is a number. You close below that, it's giving you a bearish message, a sellers in control message based on the way that the week has played out thus far. If I look at the Dow Jones Industrial number, we're trading almost right on it right now. What was it? 18. I can't even see that. Gosh darn it. Well, I can see it a different way. Let me go ahead and put the not that. Where is it? Where is it? I should probably know where it is, right? Where's my data box? Data box, not strategy, not indicator, data series, not the data series, chart trader, no, data box. There we go. So the number is, let me get my cursor out here. That'll also make it easy. I want to make sure I give you the correct number. What is it? Okay, 18,274, I believe was the number I gave you. It's 18,260. It's 18,270. You're at 18,276 right now. So right now, price is coming back and testing the level of support. So instead of the 18,274, go ahead and please use 18,270. Will it make a difference? A point or two. We're not going to let it blow our skirts up one way or the other. But if you see something substantially below that, yeah, that's actually horrible news, and says we're not just going south. We probably have an A to B equals CD to the downside. That would be in play. That's in the Dow. We don't have that message in the other indices. If we look at the transports out here, transports right now, they're strong like bull. So those of you that believe in Dow theory that the transports will lead, not follow, well, leadership says it ain't going south. 78.93.50 is the number it would need to close below out there. So for those of you that follow along that theory, this is strong like a bull. Utilities out here, we were talking about them earlier. Not until they get below 677.11 is there any problem. So that becomes your support area inside the utilities. If we take a look at the NDX 100, the number to be watching there is 48.47. We'll call it 48.47. You're at 48.61 right now. That would be the number to watch out here at the end of today's trading session. See how well I've been able to train myself for that. New York Stock Exchange, the number out there to be paying attention to, 10,687. We're probably about, 87, 97, 107, 30 points away from that. How do you like that for quick abacus math in the noggin out there of all places? If we take a look at the Russell 2000, the number there is 1247. And these numbers that I give you, if price is trading above it, no big deal. Just a normal retracement that's in the works as we speak today. And from a weekly basis, you still have gains out there. You close below it, daily wise, it's trouble in River City out there. S&P 500, the number is going to be 2159. You're at 2165 out there. So still at this stage, everything looks okay. If we look at the Wilshire 5000, we'll finish it off by taking a look at that. 22,478 is the number. Now, I know there's a few people that said, well, what about the XAU? I saw that on your screen. So I'll give you the XAU. Since you asked about the XAU, it's 94.53. You don't want to see price close below 94.53. If you do, the message is that there's a lot lower price coming for the gold mining individual stocks out there, or the sector itself. Individual doesn't tell us which stocks out there. So, folks, it is fabulous, fantastic, sometimes fun day. I think every day is a fun day. Friday. So thanks so much for being here. Stay tuned. Our man, David White, he's going to be up next. Then you got the Tom O'Brien Show from 3 to 5. Have a fantastic, a wonderful weekend. We'll see you on magical, magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.